Good morning, ladies and gentlemen. This is Butch Shorak. It's Monday, February 25th, 2013. Welcome to Options University Market Forecast. And with that thought, access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We are not a service that tells you what to trade. We are not implying or guaranteeing any profit. And as always, do not trade with money that you cannot afford to lose. And as we look at the week that just took place, as we look at the Dow, the NASDAQ, the S&P, the Russell 2000, we see that for the week, percentage change was not all that much, as we look pretty much at a flat week, with the Dow up 0.1%, NASDAQ down 0.9%, almost 1 point. S&P up down 0.3%, and the Russell 2000 down 0.8%. So slightly down for the week as we look at our indexes, except for the Dow. And we see that as we look for the year to date, as we are about 7 weeks into the new year, we see that we have risen this year at an unsustainable rate. We could not keep doing this over and over again, week after week. So this is one of these lull weeks, and we certainly expected it. It was time for a pullback, and we got a bit of a very small pullback in this upward trending market. Looking at economic announcements for the coming week, we see that on Monday we have basically little or nothing going on. Looking at Tuesday, we see at 9 o'clock we got house price index, S&P Case-Shiller index at 9 o'clock, new home sales at 10, consumer confidence at 10, Bernanke speaking at 10, Richmond Federal Manufacturing Index at 10. So Tuesday is a day that's got quite a bit going on. Looking at Wednesday, we see we got durable goods order before the market opens. Pending home sales come in at 10 o'clock on Wednesday. Looking at Thursday, a big one when we look at GDP, what happened to GDP during the last month. Looking at jobless claims, we'll find that, which we look at every single Thursday morning, looking at the previous week. And then we got Chicago PMI at 9:45 after the market opens. As we then break into the month of March, February will be long gone, and we'll look at personal income and outlays on the 8:30 in the morning. Consumer sentiment will come out after the market opens. ISM Manufacturing Index at 10 o'clock, and construction spending at 10 o'clock. So as we get into the week, we see that we have a bit more going on than we do Monday morning, which has not a whole lot happening. Looking at our overall trend, we see that our overall trend is definitely up. And look at this, we finally had that pullback that we've been talking about. Where did we pull back? We pulled back to that first target that we talked about, which was that 30-day moving average. That was expected. It was where we talked about going to, and that's exactly where we went. And we see that on Friday we got a higher high and a higher low, indicating to us that we could very easily behave better back to this upward trend line. Let's take a closer look at the week as it was. And as we looked at the previous week, we see that on Monday it didn't do a whole lot. We had an up day on Tuesday, and then the pullback began on Wednesday. Big pullback day, lower highs, lower lows. Thursday, exactly the same thing. And then Friday, we got our little bounce out of the market as we hit that first level of support that we were expecting, right around 1,500 on the S&P. Looking at the Dow for the previous week, the one index that was up for the week, we see that we ended up higher than it began the week, and so we saw that we did have our little pullback, which was what followed the other markets, but we got even a bigger bounce on Friday than we did out of the other indexes. NASDAQ, which was down almost 1% at 0.9% for the week, we see that it had a bit more of a pullback, but the 30-day moving average was still a little bit further behind, and we see that we got a nice bounce on Friday out of the NASDAQ. So down for the week, but looking healthy, looking like we're headed for some of those previous highs. Watch for a breakup, and remember where our target is. Looking at the SPX, where we expect it to go? Up to all-time highs, and it's only a short distance away, and even closer for the Dow. We look at the Russell 2000, we see that it pulled back again. 30-day moving average was the magic number. Now we got a bounce, and remember, this is exactly what we talked about. Markets pulling back with a healthy little pullback to that 30-day, and then bouncing back and headed for new highs. First target, previous highs. Next target, continue on up with this overall uptrend that we've been looking at ever since the first of the year. All right, let's take a look at the VIX and see what happened. Oh, there's that big day on Wednesday. Look at that VIX. Went all the way up to 15, and you see we're now headed back down at 14. If the market continues up, we can expect that the VIX will continue back on down. Not a whole lot of fear in the market through this entire thing. All right, so that's kind of looking at the indexes for the week and looking at our fear factor. Let's take a look at some of our other sectors, looking at the bond sector with TLT, which is our ETF for bonds, and we see that as the market did pull back, bonds kind of rallied a little bit, but not all that much as we see it. Still in the same trading zone that we've been in for a while, and we're just about hit resistance on the bond market. And we'll see if as the market pulls up, we would expect that this will pull back and retrace to the previous lows. Next, looking at the financials, we'll look at the XLF, our ATF for the financials out of the Spiders Select Sector Fund, and we see it looks very much like the overall market, as we do exactly expect the financials to somewhat follow the overall market in this current environment. Remember, this is one of those things that's favored. This is the banking sector, and favored by QE3, which Bernanke has set out to save the world. Next, looking at our oil sector, let's look at USO. And as we look at USO, look at that. New lows. Have kind of a dichotomy here. I don't know about your town, but our gas keeps going right on up, and look at the oil sector seems to be headed back and pulling back a little bit. We haven't seen it at the pump, and it'll be interesting to see what happens as we just keep getting higher and higher gas prices. All right, next let's take a look at the final safe haven, looking at the gold sector, GLD, which is our ETF for gold. This is how you can play these sectors. We see that we have bottomed out here, and we'll see if this will head back up with the overall market as we've had quite a pullback in gold, as we used to be up well over this 170 level. So gold just keeps pulling back as there's very little fear in the market and very little reason for them to pull their money out of equities and put it into safe havens at this particular point. So that's our sectors that we wanted to look at. What kind of volume did we have during the last week? Well, you saw as we had our pullback, we pulled back with quite a bit of volume on Wednesday and Thursday. And then as we headed back up on Friday, we did that on average volume. So we had an interesting week. We had kind of a tip-off on Monday, where Monday the market really went little or no place. And look at that volume surge on Monday as there was more interest. And the big fight that took place told us that the market could be a little unstable at this point, and then we did get our pullback after that surge on Tuesday. So there's Monday, there's Tuesday, got that surge up on Tuesday on low volume, and then almost like an exhaustion rally, we pulled back down to that 30-day moving average, which is exactly what we expected. So for those of you that are gold members, stick around. We've got our stocks to watch, and we'll take a look at these stocks that we've been following for quite some time. And so for those of you that are not gold members and would like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. That's www.optionsuniversity.com/free gold. For the rest of you, ladies and gentlemen, thank you for being here. This is Butch Shorak, Options University, Monday, February 25th, 2013.